Step back from the noise. Chicago still leads the nation with 1.4 billion square feet of industrial space. Vacancy may have crept up, but demand, infrastructure, and power hungry users are keeping the market remarkably firm. Let's take a deep dive. Let's step back and look at the region as a whole. Chicago is still the biggest industrial hub in the country. With over 1.4 billion square feet of inventory, vacancy right now is running around 5.4 to 5.9%, depending on which data set you pull from. That's higher than the crazy tight 3% range that we saw a couple of years ago. However, it's also still well below the long term average. Translation, we're not in a free fall, but we're normalizing. Rent growth has cooled, absorption has slowed, sublease space has ticked up a bit, but the base of demand is still very strong. This isn't a market that's falling apart, it's a market that's catching its breath. For investors, gone are the days of underwriting 10% annual rent bumps and getting away with it. Now you need to have discipline. You've got to look at location, user mix, and how utilities line up. The most important truth of this episode is we're starting to see the outlines of the next real value play. And it's not obvious to everyone yet, so I'll come back to that towards the end of the episode. For occupiers, the good news is you don't have to panic anymore. In 2021 and 2022, tenants were grabbing anything they could, often making decisions in weeks. Today, you've got breathing room. You can tour a little bit more, you can negotiate a little harder, and lock in more flexibility. What you probably won't see are massive rent cuts, as landlords are still protecting rate cards. But what you will see are richer concessions generally across the board, including TI dollars and lease terms that actually bend towards your business's needs. Now, let's get to the fortress, Elk Grove Village and the O'Hare corridor. Vacancy here was just 1.96% in quarter one of 2025. That's basically zero. And remember, you can't just go out and build another 50 million square feet in Elk Grove. It's built out, so supply is permanently constrained. Add that to all the infrastructure that's going in. ComEd is already constructing a new 260 megawatt substation to feed a massive data campus near O'Hare. That's the scale of demand that we're dealing with, not just warehouses, but power hungry cold storage and data tenants piling in. On top of that, the $8.5 billion O'Hare modernization project is underway, which means that more passenger traffic, more international cargo, and more corporate business is headed to Elk Grove and O'Hare. The halo effect of that expansion only makes O'Hare adjacent properties more valuable. So, for investors, Class A industrial in Elk Grove and O'Hare isn't just stable, it's gold plated. Scarcity, power, and airport adjacency keep driving up value. If you own land here with entitlements, you're sitting on long term premium assets. For occupiers, if you need space in this corridor, you can't wait until you need it. You have to pre commit. Utility upgrades alone can take 18 to 24 months. So if your business is power intensive, you need to plan now, not just next year. And if you don't absolutely need O'Hare, you might be better off looking north or west because competition here is fierce and pricing reflects it. Now, let's talk about Lake County, which I think is one of the more underrated success stories in Chicagoland. Since 2021, Lake County has seen 1.78 billion in investment, creating 4,000 new jobs and retaining another 2,700. That's a big win for a suburban county, and it's not just numbers. It's a whole wave of new activity in manufacturing, life sciences, and advanced logistics. Why? Well, you've got pro growth municipalities that actually want development, permitting is faster, deals move smoother, and investors don't get tied up in endless approvals. You've also got a serious talent base, especially in the life sciences. Abbott, AbbVie, and their ecosystems are all here. You've got great connectivity north into Wisconsin and south into Chicago without the same congestion and land pricing that you see around O'Hare and Elk Grove. So, for investors, Lake County is the execution story. It's not the flashiest market, but if you want to close a deal and actually get it built, this is where you go. There's also real opportunity to modernize older industrial product and reposition it for advanced users, particularly in the life science space. For occupiers, Lake County gives you a cost advantage. It's more affordable than O'Hare, less congested, but you're still within striking distance of the whole region. If you're a life science tenant, the clustering effect here makes your hiring and supply chain easier. And for logistics players, it's a solid regional node with quick access to both Milwaukee and Chicago. So here's the industrial takeaway. It's still the healthiest sector in the region. Vacancy has ticked up, but only to sustainable levels. O'Hare and Elk Grove are landlocked powerhouses with no end in sight. Lake County is growing fast because it can actually get deals approved and delivered. But I'll say this, the real story isn't just in today's leases or today's rent rolls. The smartest money of all is already chasing something else, the infill redevelopment play. I'll circle back to that when we wrap up this episode because it ties kind of everything together, office, industrial, and land, in a way that most people aren't really fully appreciating yet. But still, ultimately, that's the biggest play in the room. Please do us a huge favor and like and subscribe for more helpful commercial real estate content.